In this video, I'm going to look at how to make backtesting simpler. My name is Kim Watson of the Pivot Trader. I've been backtesting manually for years, and it can be quite complex. A lot of people just don't do it. But the important thing is, and Jesse Livermore put this together pretty well, this statement, only the game can teach you the game. In other words, you've got to be in it to learn what the game does. Now, you can do this straight away with money, and it can cost you, can damage you, and certainly damage your account quite big time. Or you can go and test something, and it will give you a good understanding of how it all works. So that's one reason why to bother. Now, the other reason is, of course, or reasons, are things like it doesn't matter how good the strategy or how good the strategy is being sold to you, or claimed to be. Markets change. So even the strategies I've looked at in the past, I'll use them, and all of a sudden the win rate is dropping, it's going flat, it's starting to lose more than it's making, in which case I freeze them, depending on certain criteria, but I freeze them or stop trading with that particular currency. So markets do change, and only by keeping records will you see the picture of things are actually changing. The other thing is, one of the reasons why you bother is how confident are you with your strategy or this strategy you've got. Why do you believe it will work? And a lot of people may just believe it because some gurus told them it's great, it's the best one. I learnt this off of X named millionaire or something like this. Well, I'm a multi-millionaire, follow this strategy. Does that make you really confident? What's the potential drawdown of your strategy? Do you know what your strategy's drawdown is potential or has potential? Now, potential only means it could do. Of course, it could do more. So if it's got a drawdown of potentially 50% at some stage, it could completely wipe your account off. So it's understanding what sort of drawdown, how do the flow of winners and losers come. And the most important thing, is it profitable over the longer term? Being profitable over the last 3 months, it's great for a quick and dirty, a quick test just to see how something might be working, but then starts the hard work generally, and it can be quite complex. So the idea of this video was to make things simpler, so I'll do just that. And the question I've got, if you haven't already backtested it, why haven't you backtested it? Why do you think you can just trade without testing anything? Because you'll never have the confidence in something so much as if you've tested it yourself. So where do you start? Now, the most likely thing for a lot of people is that they take a strategy they've been taught or they find on the internet. There's lots of stuff out there these days on the internet of claim to be this, that or the other. I've taken a strategy that I'm going to show you as an example. It was an old strategy that I used to use years ago, and it was all right. It worked. It works across different markets. But I found better strategies and just left it. And to be fair, I couldn't be bothered testing it because I had other strategies that I wanted to test. And I was doing it all manually. It was taking me a month of Sundays. There's other things when you get more experience that you see and you want to test and you've got a bit of an idea about and you want to test it. That's another reason. You take that idea and then you write down some logic. You have to have that. I call it logic. It's initial rules of what the setup is effectively going to look like before you buy or sell what you're looking at. So what are those initial rules? Then what? You've got to test it and decide on how it's going to trade. Is it totally mechanical? In other words, will it be fully automatable? And I think that's a word. I've just made it if it hasn't. But is it totally automatic, or have you got a discretionary point on there in terms of if this is happening, I'll do that, and vice versa? So anything where you get involved in it, that's discretionary. Where it's mechanical and you can just let it run on a expert advisor, for example, MT4, that's purely mechanical. Do you know your stop rules? What are your stop rules going to be like? Now, you notice I say stop rules before I say profit rules or any other rule. Stop rules, very important. What are the stop rules? What are the entry rules? You need to know your risk. That's the difference between your entry and your stop. So you need these as a go. Trading times. Have you got specific trading times you want to take into account? Personally, I don't like trading before 8 o'clock in the morning. Why? Well, I backtest things, and I noticed that pre 8 o'clock it can be a lot more iffy than post 8 o'clock. So I have trading times. Now I can expand those trading times for a new strategy to see how it goes, and then discount the times that don't work so well. And I'll show you this methodology, this simple backtesting software I'm going to be showing you, how you can see what hours perform the best. Time before it triggers. So if the setup comes, have you got a specific time? Personally, I've got some strategies. I've got an automatic strategy which it needs to trigger in the next hour. So once it's set up, if it's not triggered within 60 minutes, it's out. I'm not interested. So I've got specific a time trigger sitting there. How do you test it? Manually, you just pull a chart back and you can do it that way. That's really the hard way, but I've done it the hard way. But what's even harder is the spreadsheet that you then develop and all the different things you start writing down, and it's a grind, I can assure you. I've been doing it for years, and it's really a pain, and I can understand why people don't backtest when they just have to do it manually to a degree, because it's hard work. But you've got to do some hard work to be successful in a lot of things. It doesn't just come naturally. Often, sometimes it might do. Anyway, manually, is it fully manual, and do you test it that way, or do you use some software? There's plenty out there: TradingView, MetaTrader, NinjaTrader. There's many others. Now, all of these, many of these are coded, so you have to do some form of coding. Now, I sort of switch off when you mention the word coding, and it's not really making things simpler when it's coding. So for me, most of these are ruled out straight away. Now, the more clever you, the more tech savvy, will think, oh, they're fine. I can work with all of those or any of those. That's fine. But I'm talking about making things simple here. If it's too complex, what do people tend to do? Get a bit bored trying to work it out and leave it and just think, oh, I'll just carry on trading it and potentially lose money. So I'm going to introduce you to Naked Trader. Now, the guy that put together Naked Trader software, he contacted me after I was on the interview with Trading Up some time ago, and said, look, I've got something you might be interested in. Have a trial of it, have a play with it, see what you think, give me some critique. And I've been doing that over the last few weeks, a couple of months now, I think, if I had it. And been playing with it, but I literally have tried different things with it. And it's quite intuitive. You get into the picture, and I've really had some fun. And I'm looking, and I've taken some old strategies and been testing them and looking at getting the logic around some of the setups, so I can write down it in detail. And I quite like that because it makes things more specific. Now, the software, I say it's relatively simple. If you're completely blind to technology, it may be not for you. But if you've got just a little bit of tech savvy, it will be fine, and I'll make sure I'll help you. It allows you to test manually, so you could just literally put a date that you want to start your testing off into it, and then click it bar by bar, or even sub bar. You can do it on whatever speed you want, down to a minute intervals. So you could be looking at an hourly chart effectively, but watching it flow just in minutes, so you can just get a feel for it, or 5 minutes, call it 15 minutes, etc. So it allows you to test manually, and the most important thing for me though is it records the trades and does the analysis you need for you. So you're still doing it manually, you're no longer messing around with those spreadsheets. And it gives you some good analysis, I can tell you, which is essential. I talked about drawdown, gives you all those sort of figures straight away at the touch of a button. So that's brilliant. So it's purely fully manual with the hard work or the writing down the spreadsheet taken away. I know some people that just wouldn't do backtesting because they didn't want to play with spreadsheets. Here, you don't need to play with spreadsheets. So already I've made it simpler. Now, it allows you to enter a setup through with a number of rules and make it semi-automatic. This is my favorite mode mostly because I can see how the trade's coming along. I can click a button then and then semi-automatic trade it. I can put the orders in myself, or again I can use some rules about putting the orders in. There's all sorts of basis but keeping it semi-automatic. Or you can go fully automatic, so you can just put the strategy in, all the details, press the button, and boom, done. You got a result, and it's pretty quick. I mean, to be fair though, I'm saying that I'm using one currency at a time. Maybe if you traded it and tested it with 20 currencies, cross pairs, or whatever else, it might take a little bit longer. So that's the process behind it. There's no coding involved, so you're not actually writing coding, you're just using simple logic. So I'm going to show you and demonstrate it. When you write down your strategy, you'll have effectively simple logic. You'll have some rules, and all you're doing is you're putting together the basic core rules of your strategy and writing it down, but you're just doing it from choosing from a pick list. Basically, if you can describe your strategy, you can set it up on here. It's just using the logic, and that is absolutely important. It allows you to have a discretionary trading aspect within it, because you can set it on semi-auto. So you can take any part as a trading discretionary part, and then automate the last part, whichever you want to do. As I've already said, you can test one or several currencies at the same time, and when you're initially doing your sort of learn, if there's certain things you think, I need to do this, you can adjust some of the rules as you go along. Now, I strongly recommend you don't do that when you get to the final cuts, but when you're setting it up as you would with any strategy, you might just run it for a few days, weeks or months, and then decide, well, actually, if I just adjust this or that, it will work better. And I can tell you this is very powerful because it's so simple. So it's simple and powerful. Now, the great thing about it has a number of data sources. So you can, if you're using Pepperstone or someone like that, you can use pepperstoneforex.com. It's got a number of sources, but it also, the important thing is Naked Trader, they've put a true spread in there. And this is so essential when you come to backtesting. And this is what frustrates me often about backtesting, is you only see the price that's on the chart. Now, we know at 10 o'clock at night the spread's widen, but the price doesn't necessarily get stamped there. The bid or ask might move around a little bit. You might see a bit of it on the chart, but not all of it. What he's done is taken the actual true spread and covered it. So if you use the true spread, the Naked Trader spread, true spread, it's brilliant. Now I'm going to do a demo using a very simple stochastic strategy that's been around for some years. What we're going to do is we're going to write down the rules for a setup. In other words, what the signal would be for me to take the trade, and then we're going to take that signal, and I'm going to be semi-automatic on it in a moment. So I'm just going to manually trade it from there. So you build the rules using logic, and as I said, logic, so i.e., well, let's have a look at the logic in a moment, and I will talk you through the logic. This gives us a setup, we can test this. So the process, you take core rules, the little things. So, for example, price must be greater or less than the 50 moving average, whichever it may be. That's a rule. So price high is less than 50 simple moving average for the time period you're looking at. That is a rule, and then you can add other rules to it. For example, once you've got the rules all together, you've got the setup, and you can decide on what action the software takes next. Does it just then stop there, allow you to manually trade it? This is the way I like to do it initially anyway, and you can decide on how you trade it. As I said, you can semi-automate even the order process. So it'll take the trade, calculate 1%, everything else, and do it. You haven't got to manually do any of this. It's all set there for you. And then finally, there's the entry and exits overall. As I said, you can set these up individually and just make it stop when the setup occurs. Make the run stop there, and just manually drag one of these, the entry in. I drag the entry in, and on my entry it's also got the exit. So I've got it all built in together in very simple ways, and it just means that once I've got the setup where I want it, I drop in the entry effectively, and it's got the rules for coming out as well. So the whole lot comes through, and I just tick it bar by bar. So that's on one strategy. On another one, which we're going to do here, I'm just going to forward it. I'm just going to go click by click. Let's have a look at this little strategy I'm going to teach you, or I say teach you, use. So it's a little stochastic swing strategy. Let me just show you on a chart first. If I can bring a chart into play, get a chart into play, that one will do. Okay. So all it is it's looking at stochastics as an oscillating indicator. So when price is retracing, well, the oscillator will retrace as well, funny enough. But it's giving you a tool to help you do something you can do very easily manually, but it helps you program something. So in this case, it helps me set a trigger to sell when something occurs, by using the something occurring down here, the stochastic. Now I've set this up as a 1433. All I'm looking for is a downward market. It's below its 50 MA. This isn't absolutely perfect here. I think that might close bang on the 50. If it closes above the 50, I discount it, and I'm then looking for the bar below there, and then once it's crossed over, the stochastic's crossed over, and the 80, it's below 80, I'm selling. And then the exit is designed on the basis of where you've got the crossover of the back through the 20 and crossing the %D. So the %K is the stochastic, %D is the line that I'm just using as a signal. So or averaging line rather. And it's just given me the opportunity to exit that point. Now, I will just say by using the semi-automatic, I actually realized that by waiting for it to cross over underneath here before I exited, gave me a better result than when I was just looking for it to close below the 20. So the below 20 was down here, the crossover was down lower, so it was around about here somewhere. So it just gave me an extra bit of profit on there. So that was just purely by doing a little bit of backtesting using the tool itself. So there you go, that's it in simple terms. Just so you can visualize, because I'm very visual myself, I like to see these things. So the actual rules then, so I've written the rules down. Price must be below the 50 simple moving average, but the easiest way to do for me, because I'm semi-automatically trading it, as long as the current price is below that 50 simple moving average, I can determine whether it's just running along and it's been hand railing it or something, but as long as it's below the simple 50 moving average, that's the rule. The stochastic set on a 1433, the %K must be 80 plus or greater than 80. It must not close above its simple moving average. So if one of the bars after the setups there closes above the simple moving average, I scrap it. Now it triggers when the %K breaks down below the 80 level. So it's very simple. You can see the rules very, very simple. Now you can do this with any strategy. Just write it down like this. To get the entry bar, it must be a red bar. The entry is 2 pips below that red bar, or below the low of that red bar, and that's the entry. The stop is placed above the highs. The highs that's just underneath the 50, or if it's pretty close to 50, just above the 50 simple moving average, just above it. So there you go. There's the rules. Then there's the exit. The exit is taken when the %K drops below 20 and crosses back through the %D. That is pretty much it. Risk amount is 1%. You see how simple it is? It is simple. So some features, we'll look at those in a minute. Let's get on and look. Firstly then, let's use it. So this is the tool. It looks a little bit like MT4. There's different options of it. I'm not going to go through those because I'm making this simple. What I'm going to show you though is how to take those stochastic rules, and we're going to apply it. Now we've got nothing here running as a backtest at the moment. We'll do that in a moment. First things first, we're going to write some rules. So we go to this rule manager, click on rules, and it's all about logic. So as I said, you just got to write a rule. So we're going to write some core rules down. I'm going to write the whole core rule, or all the rules for the setup, in one go. Now you can split it up separately. If I click on core rules here, already got some things like price close above the 50, price close below the 50. So I could drag. They're just simple core rules. Oh, that's the wrong one. It's all right. I started getting more technical on the other one and just put the whole thing together. So this is the price is closed below the 50 simple moving average. That is the rule. So just check. So you just take the close of the last bar is less than the moving average, and you click on here and you'll see it says 50 simple moving average. So that is a rule. So that is part of the rules. Now what I'm going to do is take this rule and add to it. But I'm not going to take this. I'm going to start a new rule so I can show you how to run it. It's a core rule, so we'll leave it there, and we're going to call it the stock short. So it's going to be the short side of things. The basis of this is you've got the long version and the short version on any strategy. This is the short version, and I'm just going to put today's date, 15th of May. So there you go, stock short, 15th of May. And I'm going to put core next to it just so I find it easy to pick up again. Okay, so price needs to be below 50. So here's your rules, so you can pick up from here. So the high of the price. Okay, that's fine. Sorry, I should click on that and explain. The bar position 0 is the last bar, so it's shown as 0. And now it's got to be less than, so we go into the operators here, and you've got all the different versions here. You really need to play with this for a little while. You can get the demo version, so it's fine, you can have a little play. So the 50 must be less than or equal, then you can put, or just less than, and we're going to put the 50 moving average. So we're going to go down to a moving average, and there's indicators, and click on moving average. Pull that in there, adjust the moving average. It's going to be a 50 moving average, and that is it. Price is less than the 50 moving average. Now, done that one, now I need to add the stochastic bit. So I could do it separately. What I'm going to do is add it on the same core rules. So I'm going to put a little and in here. So go up to the operators, find and. Going to build it all in one go. I like doing this. To me it's just simpler. And so the core rule is and the stochastic, so we need to go and find stochastic. So there's the stochastic. We'll drop that in there, and the stochastic. Now this is at 1433 for some reason. Well, that's whatever it's been set at, so it needs to be on a 1433 on this particular case. So click that. So that's stochastic. The K line, as it's written, or percent K, has got to, so we need to add the next bit on here. It has to be less than, so we go up to here. Sorry, greater than. Get the right one in. Greater than 80. So we need a value. So price value. Look through here. Input. Got an input value, and it's 80. Job done. So there it is. That's the whole of that core rule, which describes the setup. Effectively, this is the setup. The set of rules that make gives me the setup. So if price is below the 50 and the the stochastic is above 80, that's given me effectively the setup. So I've written it all in one go. You could write it into that as a core rule, this as a core rule, and when I show you the setup rules in a moment, you can just put them together there. But preference is just to pop them all together. As I say, it's about making things simple. So I've got the short version. So now I save that, and it should have it there. There you go, stock short. Now what I'm going to do is clone the rule, and now I'm going to go, oops, before I do that, let's just rename it before I get carried away. So that's the short. I'm going to do a long version. Cut out the word copy. Click that OK. So now I just need to adjust here. So it's going to be the low instead of the high. So low. Okay. It's greater than. Greater or equal to. I'm going to put that one in there. The simple moving average is there. The simple moving average, it's 50. It's all right. That's fine. So in other words, the price has got to be above the 50, so it's in a rally, is moving upwards. And then the stochastic has got to be less than 20. So I need to just change the less than or equal. Change that the other way around, and the input needs to be 20. There you go. Simple as that. Very, very simple. That's the setup of what I want to do. I've got the other rules that sit around the trade, but of course they're entry rules and exit rules. So this is the core rule of setting up the setup, or setting up the center, putting the setup together. That's all there. Save the rule. So I've got effectively a rule for the short side and the long side. Now I can just take that and put those as setup rules. So I'm now going to put a new rule here, and I'm going to change this to setup because I'm making it my setup. Now, because the way I've done it here, I don't need to add lots and lots. I've got it all built in one go. So I'm going to call this setup stock 15th May. Okay, drop the rule in there. So the rule is, we're going to do the setup. I didn't put whether it's long or short. Well, I'm going to rename that just so we know it's the right way around in a moment. And what do I want to happen at that point? Now, if I wanted to automatically do it, I'd put the rules then for the entry and the exits underneath here. But all I want to do at the moment, I'm going to run it in semi-automatic, and again, it's the simplest way of doing it. So I'm going to just scroll down the default table, if you like. There's some actions down here, and I'm going to pause the backtest. So the chart will stop moving when it gets to that setup. So it's got my setup and setup. So let's reword that. So you'll actually, if I just save it for a moment, you'll go to the setup, and there it is, setup. That's how you spell these days. Down with the kids. So let's just change that to setup. Stock short. And then I'm going to clone it. So I'm going to clone it and do it the other way around. Well, I'm just going to switch out the rule. You could just do it a second time, but I'm going to clone that one. When it's a bit more complex, you'll find that cloning makes more sense. Open this, and then just adjust. Firstly, rename it. So it's a long. Take away the word copy. That'll do. So I've saved it there. Now I just need to put the rules in for the setup condition. Now here it was just the rules that I've already put in there all in one go. If you can click on here, you can see all the rules that I've put together. So you just click on the rule so you can check your rules. So I want the stock long on this case, don't I? So I'll pop that in there instead. Drop that in there, and I want it to pause, so I'll leave that alone. Save that, and it's saved. And there I've got my low must be above, greater than the 50 moving average, and the stochastic less than 20. So I've got my oversold in a rally all showing there. Save that, and I'm finished there for now. And now what I'm going to do is test it. So and test that those rules work. Now you could just test and put it as a one setup and then come back and mess around. I know how to use it, so I'm just doing it straight away. So then we're going to call this stock test. Test May. I suggest you put dates and things on because it helps you remember. Or perhaps that's just me. You code it somewhere that suits you. Anyway, there we go. So now it asks me what currency do I want to run it on. Now I could just click all the crosses. I'm not really bothered about all the crosses. I'm just going to run it on the euro yen. It's one of my favorites. Starting date, I could do it, and I do this sometimes. I just block off certain periods, but even if I start it in 2003, you can run right the way down to through to present and do it, and it'll show you year by year. So it'll show you that how it's been running. So it's brilliant from that point of view. So you'll know how it ran from, well, actually 2003 was when we was coming out of the stock market.com crash. As we ran into 2007/8 and we ran into the banking crash, and then there was the COVID epidemic, and there was Trump in between that and anyway. So there we go, just click next. Now you can change the time zones a little bit. You put UTC in instead of GMT. It doesn't make any difference at certain points of the year. Important thing here, real spread only. I think I might have mentioned that already. If I haven't, it's very important to have the real spread on there because it gives you a real result. And if you're just manually testing, which you'd come to the same basis of doing, just clicking on backtest, bringing the little charts up here, you can make it so you can only forward test it. So you can't mess around. Once it's happened, you're either in it or you're not. It's great for ensuring that you can't mess with things. Click on finish. Of course, you can delete the backtest, and here we go. Now, I haven't applied the strategies to this. I'll do that in a moment. I just want to run a bit of feed into it first. Whoop, there we go. And at the moment, it's set on a daily test. I'm going to trade it on an hourly. So I'm going to pop it on an hourly. And now I'm going to put the setup rules onto the chart. So I just click on here. And there's my long and my short. And you see what happens? It brings the stochastic up so you can visually see what's happening. You've got the 50 moving average. It's absolutely gorgeous. Anyway, that's it. Simple as that. Now we backtest it. So we run it forward and let it come to a stop when it's set up. Now, it's not unusual to see it run a little bit. Here you go. First setup, so it's pulled back, stochastic's less than 20, it's above the 50 MA. Now I always do the next click to see what happens, because the entry I haven't automated at the moment is when the stochastic crosses back above the 20. Well, so I have to do it manually. Here's the manual buttons, and also there's a timing button. I've said already, you can strip it down and watch it in any time frame below what you're running. I'm just leaving this as an hourly for now because I don't need to. But if I really wanted to do it in a bit more detail, maybe I'd have it as a 15-minute or something like that. Or you can run two charts side by side, have it running the rules running on this, and have a 5-minute chart running side by side. It does slow it down a little bit though, of course, because it's only as fast as the lower time frame, but it's still speedy. Anyway, this has failed, so I'll leave this. It didn't trigger. Leave it. Okay, got a setup coming up here. It's just broken through. It's 80.354 on the, so it's broken through that point of view. So the setup is there. It's below the 50 MA, etc. Click the next button. It's still above it. It's giving me a green bar, so I can't sell it yet or even put the order in. But I can now. So I can put the order in now. I could at this stage, if I've got a set an entry rule, just drag it across. I do have some entry rules for a different strategy. I could just drag one of those across, but I don't want to. I'm going to show you how easy it is to put an entry on manually. So I'm just going to put, this is going to be a short trade. So I'll just press the F4 and it gives me a sell stop. The rules of this, I just put that on the low and then put it on the low, and then it's 2 pips below the low. And then the stop is above the highs here. Place that, and that's it. There's the trade placed. Now again, with the exit rules, I can drag on and put an exit rule, drag it across and put the exit rule onto the chart for this particular trade. However, I'm doing it manually at the moment, so I then just click here, And you see it's still above that, so it's not even triggered the price yet. Some people may have cancelled that trade because they say, well, it's not happening, it's run out of momentum. It's running into the next day. Actually, it's run over a weekend, and there all of a sudden it's triggering away. Now, if you're doing this on an automatic basis, you don't care if you set the whole strategy up. Now, it's then clicked down again, so it's still on the sell there. It's not quite now. I'm looking for the cross, or it's really a touch you normally get. There we go. There's a touch there. You can either do it on there, I think, or wait until it crosses over a little bit further. It doesn't matter. So there's the first part of it. Now, if I look at open positions, there it sits. There's the trade, and I'm just going to close it manually. So just click on there, close order, and that's in the bank. And we go on to the next one. Oops, press the right buttons. And right, we've got another one set up here. Let's see what happens. I won't touch it yet. It's still set up, triggered. Okay. So again, I just press my F4 button. It brings up the order. So I've got a sell stop. Click on here, drag it down, put the order above the 50. That's automatically calculated out a 1% risk. There you go. Or you can adjust it. So got 1% risk. I just set that as the default and left it. Place that. Click the next bar. Is triggered. Running. It's gone below. There's the cross. Get out. Small loss. Get out of the trade though. The rules have been met. Next one. And you're going to get that from time to time. Right, this is a long version. Is it crossed over yet? It has now. So there's the crossover. Press the F3 button. Prop the price above the high there. Stop below the lows. I'll just do it down there because it's the most logical place, below the 50, the recent lows. So that's discretionary, of course, what I'm doing here. Got a buy stop, 1% risk. Place that and then just manually tap it. It's triggered the trade. You see it's quite good because the price actually looks lower than the prior high. Now generally when we're doing this on a backtesting mode on a chart, we would be saying, well, it didn't actually go higher, but it did. The spread went higher. So if you look at the time of day, you'll see it's I mean, you could say, well, I don't want to trade at this time. That's fine. You just don't take the set. You don't set it up at this time. So it's 3 o'clock in the morning. The spread's gone a little bit wider. So, but what you will learn is what happens with it. So I'm just clicking through here. Right, it stopped me out. Carry on to the next one. But if you do take them all initially on any strategy, you can always come back and say, well, actually, you can identify the win rate at certain times of the day, so you can decide on what times of the day you're going to trade it, then go back and just run the back test with a reduced rate at times and give you a full book picture. Okay, Euro Yen 1 hourly, we've got the potential set up here. It's gone through, it's closed below. I'm not interested. Next. So what I'm going to do in a moment is I'm going to pause the old recording and come back to it. So we've got a short setup potential here. Not crossing yet. Not nearly crossing. Gone green. Gone green. Got a red bar. So now I can look at the sell side of this. Get my sell stop put together. Run it from the... Now I could run it from... Again, discretionary. Do I take it from this low or this low? I'm just going to pop it on that low for a minute. Less a pip. Two pips on that. Stop loss over the highs here. That'll do. Now again, it hasn't gone for a while, and it's actually messing around at the top end here, and it actually closed above the 50. So we'll scrap it. So you just go to pending orders and remove pending order. And press on. So you can set a rule in if it closes above the 50 to close the trade, to close the order, and that's it before it triggers. So we've got a long potentially setting up here. It's going the other way a little here. I need a red bar now. It's gone. Oh no, it's nearly there. There's the red bar, and it's gone back below. Oops, I need a green bar, not a red bar. I'm talking about it's a long. So just waiting for the green bar. There is a green bar, but it's the stochastic's not above the 20 yet. Red bar, green bar, another green bar. Is it going to? Is it right? It's above the 20 now. This is it's a setup, and it's all done wherever it's done. So it's a quick press of the button. We're going to buy at the break here. That's a few pips above the area. It's a bit of common sense here. Stop below the low here. Dare I use common sense in trading? It's risky. Place that and then click on it. It's triggered. It's going to stop it. Surely it's going to stop it. It's not quite got over the 80 area yet. That's what I'm looking at, by the way, at the bottom. So I adjust it by what happens below. It's still going up. Look, it's still going up. Not crossed the percent. There we go. Now it has. So then we close it out. If I can find the trade, open positions, click on it, close. So that could be automatic. That's just a rule to write on there and drop it in. I haven't done that on this particular example. I just want to make it simple for you. That's it. Now I'm not going to go on and show you. I'm just going to show you. So we've gone that far. We're going to file, save backtest as. Yeah, that's the one. We've already put that in there. So we've saved the backtest. We can go back to it anytime. We can come here, file, restart backtest. We can restart this one if it's everything's shut down. We can reload backtest and go and find it. So you can click on what you've got. So that it's all saved there. And then the statistics. Well, this is the creme is because I haven't had to write a single thing down, and I love it, or type a number in. So we get a bit of an overview. Now, firstly, of course, we need to put, well, what do we want to? Where's the data coming from? So there it is, May the 15th. Well, it looks like a bit of a curve, doesn't it? It had a bit of a drawdown in October. And there you go. It's there. It's sitting. It actually, lost a little bit money on October, made a bit in this November at the time. So you can see that now there's not enough results. I'll bring something up that's got a few more results on it, but lots of data to look at. You can look at the overall stats, number of winners versus number. I mean, this was a two aside, 2 winners, 2 losers. That matters little because it's all about making money. So you can look at the net profits and find the important thing. It made 2% over that time. Average win rate, how much it makes on a win, how much it loses on a loss, and so on. So you can get a bit of an idea. This is so not enough data. you need to get a lot of data, and there's no reason not to run it until it's got lots of data. I'll tell you what I'm going to do. I'm just going to bring in a different one, and you can just import from a back test. So we should just use that one there, and you can see this is running over a year. And you can see the month by month returns all sitting there, overall stats here. You've got important things like Sharpe ratios, which show profitability. You've got other standard deviations, all sorts of Z-scores. I'm not going to go into that detail, but the important thing is you can see the average win, the net profit, 55%. Well, actually, 62.62%. Wouldn't you like this strategy? Anyway. It's there you go. That was taking every single trade in that year for that particular strategy. You can see everything else, the longs, the shorts, win rates. You can look at the timing analysis. Was there a particular, I mean, I tell you what, the 11 o'clock in the daytime ones were beautiful. Had nine winning trades and I think one losing trade. Beautiful time for it. Just it's golden point. I mean, it did okay all the rest of the time. I'd only traded it between 8 and taken the last trade before 3 o'clock. So that was it. That was the range of trading it. If I'd put others in there, it would have been probably a lot lower. You can see the day of the week if you're interested, the month of the year. So you can go all the way through this. Keeps you happy. Now, this is important. I sort of look at this and sometimes you sort of semi-discount it. But the days of the week are important. When you're actually doing the analysis, if you see that January, the first week was a disaster, which it generally is, just don't trade the first week. And I've taken it out. It's not here. So January is only from about the 5th or the 6th of the month. I'll take the first week completely out. I think this year I came to a decision I'll take the second week out as well. Anyway, we've got this. We've got the Monte Carlo. This is not somewhere you're going on holiday. This is a different type of analysis that randomly takes the order of trades that occurred and mixes it up and gives you the average drawdown 4.38. So this is pot luck effectively, which is the market at the end of the day to a degree. The worst drawdown actually there 7.45, average drawdown 4.38. So it gives you an idea. You could actually run through that's the worst drawdown was 7.45%, 8%, let's say. So there you go. There you go. Showing you it. I'm not going to go into any more detail on that at the moment, because then you make it complex, and it really is very simple. So you can set up the time periods, allowing for higher or lower time frames, by the way, and that's really quite nice. You can have different time periods. And in terms of, if you want to get into trends and have the daily, you can set in the rules the price must be above the daily 50, and the 4 hourly must be above the daily 4 hourly 50, and then the hourly must be above the hourly 50. So you can set that sort of type of rule up where you layer on the different time periods. You've got options to change that sort of thing. So it's got some great features in that respect. Also, probably the most exciting thing I think is the development of the MT4. So you can actually download the format at some point, and it's not ready yet. It's under development, but it's happening. And you can load it as an MT4/MT5 expert advisor. So when you've taken it, instead of paying for someone to go and code it, it will take the code and you set it up correctly for MT4. So it's a brilliant feature. You'd obviously test it in MT4 once you've got it there, in terms of making sure it works okay, semi-manual. But there you go. That's one of the forward things. Now, personally, if you're with one of my members, I think it's this is a real quite a game changer, and it's in terms of what I'm doing going forwards. I think if someone can see their test results, it's really, really important. So it's becoming a bit of a core element of people being able to do it for themselves. So I'm going to offer support for those people that are doing it for themselves. The important note, caveat here, is we cannot see the future, but we can sure get a good idea of what the past was like, and get an idea of what it could be like, and then we can use things like Monte Carlo, which jumbles everything up, and see where does it still work, what's the sort of drawdowns, and have a look at something. I'm going to be setting up a specific Telegram channel for supporting and development of strategies with my clients. I think it's important, so that's going to go handy in hand here. Now, there is also, I'm going to also put a load of very short videos doing little step-by-steps. So it's literally like a couple of minutes video, and run them step-by-step of each, building a strategy or building core rules, so you can build the different bits and how you do it, looking at different bits, literally every single tiny bit there. So that's going to happen. Now, to be fair, the Naked Trader, they've got some of those sort of things, and quite a few of them, but I know my clients, and I know their abilities, perhaps some of them, so I just want to make sure everyone can use it. It also looks like possible to share rules. So if I've got a rule, I could share the rule with someone else. And even if it's not automatic, I think I can share the file. In fact, I know I can share the file, but you could just literally drop one file from one computer to another. Now, Naked Trader also offers support, and they've got their own forum, which is again pretty useful. So it's there. If you're not interested in doing anything with me, you can go and do it directly with them. Now, they have offered a special offer. This trading software is normally $269. They've given me a link of $20 off, which is pretty decent because this is so cheap. I mean, in pounds terms, it's 200 quid roughly with what they've done there, which I'm looking at some software out there, some effectively alleged artificial intelligence that has no artificial element apart from the fact that you press different buttons to get the results, but that they will charge you £100 a month. This is a single one-off payment, so it's value. You can use this coupon. If you're watching this on YouTube, I will ensure that you've got a coupon code below, so you can just click on that. And that is it. Question and answers, we just throw them to me, put them in the questions below, just comment below and I'll do what I can do to answer you. Take care, hope you found this useful. I tell you what, it is making testing so much simpler, and just the very fact that I don't have to write anything down on a spreadsheet, I am chuffed. So I wish you all the best, take care, bye for now.